Good evening, traders. This is FXRPS with ForexSimplified.com, and we're with the Monday class. We'll be talking about channels, pennants, flags. Last week we started a class on channels, horizontal up and down channels, but we took a longer time. We couldn't finish everything, so we'll continue with the channels, then we'll move to pennants and flags, and if time is not enough, we'll continue next Monday. Whenever anyone has a question, please just type it, and I'll be answering your questions. Like always, I'll start by explaining a simple channel. First, I'll draw it around the charts, and then once I explain it, we'll move to the charts and we'll try to find some channels and see how the price acts around a channel in real charts. A lot of times, as price is moving, we can see the price trading in the same range, and the way we see that is once we pull a trend line, and then we'll notice that the lows are going in the same, the lows and the highs are going in the same direction, and when we draw a parallel line, we'll see that they actually move in the same channel, and this can happen all the time. Sometimes the price will drop from the top side to the bottom, straight down, and sometimes it can go just to the middle of the channel, then come back. It can consolidate in the channel, and once it hits the top side, it can drop down. Price can do all different moves while it's in the channel. Also, when price is moving, sometimes we can see it moving out of the channel for a little while, then coming back in. Also, what we can see is sometimes the price can start forming a parallel channel on the one we used to be in. And it can look something like this. And then it can move back to the original channel. I'm pretty sure all of you guys have seen channels before. Let's look over some real charts. In the meantime, just give me a second. I need to fix something. Now, this is an example of the price moving in a channel. I will also show you one on, I think it was dollar yen. This is the Canadian. This is my dollar yen chart. This is 8-hour chart. And here is when the price was moving in a channel. A lot of times when we see the price breaking out, you all know how much I like trading the bounce of the back of the trend line once we break out. And here is the bounce. A lot of people like trading the channel inside. And this is a very good way to capture some pips. Also, once we break out the channel and we retest the top or the bottom side, in this case the top side, we can capture pips on the move out. A lot of times once the price breaks of a channel, we will see a lot bigger than the move that we see in this case here. But we can see actual trend reversal. If we used to be in a down channel and we break to the north, we can see a move actually reversing the initial downtrend. Also, on the price had a good chance. Sometimes price breaks out, and as I said, it can come back in, and that's why we'd like to have some kind of confirmation when price is breaking out. This is, don't forget that this is an 8-hour chart. When we like to enter our trades, we were entering all those trades on a lot smaller time frame. Let's take a look at a different chart. We can see price forming channels all the time. Even here, now when we're in the up channel, same thing is for a down channel. But in an up channel, when we bounce off the bottom side of the channel to the top, this is where we're going to see the most pips, and this is where we'll see the fastest move. Now when we bounce off the top side to the bottom, a lot of times the market can even go horizontal. Let me draw this. But sometimes you can see the market do this and then move up. So if we're in an up channel, the best thing to do is to be buying bounces of the bottom side. We can also sell the top side, but sometimes you might get in some kind of consolidation if you sell the top side to the bottom. enter my password here. Back to the chart. Now, good way to trade breaking out of a channel is, now here we've been in a down channel. We see a breakout, and what we can do, we can try to go to a lower time frame and look for some bullish trading opportunities in this area. Now, what I would like to, what I'm looking in trade setups like this is, I will look for either head and shoulders, bullish head and shoulder pattern as the price is breaking off the channel, or if I can find some kind of support level, like here we have the 618 from the Feb, and what else we have? We have some previous lows and highs. I can look for some kind of butterfly or crab converging in this area. The best thing is to look for head and shoulders pattern, because first what we're going to see is a breakout. Now a trend line will be broken, and I would like to draw it on my other charts once they load, but I'll try it here. So this break is very narrow. It's the price is moving more horizontal than bullish, but most of the time when we see a breakout of a channel, if this was the channel, I will give you an example on the euro dollar. We would see, let me zoom out, like this. Okay, I want to make sure you guys can see everything. Now the price moves up, it breaks the trend line. Best thing it can give us is okay, I'm moving to a flip trader. There we go. Zooming out. This was euro yen. Now we're breaking the trend line. This is the same chart. And and my charts are still loading. A good trade for us would be if we take the previous high. The high here taken, and the price, the trend line broken, is a very good indication of the trend of the trend reversing. So when we're breaking out a channel, as I said, I'd like to find a bullish head and shoulders. And you will see this in most of the breakouts. As I said, this one here is it's breaking out with consolidation. So the next move here is the price going down and retesting the left tip or the left shoulder. This here was our left shoulder. This could be the right shoulder. And trading off the retest. Okay, I think we're good to go finally. I'm sorry, everyone. Sorry, guys. Anyhow, now we used to be trading, as I said, in this down channel. We saw the price breaking. If we take the previous high, I want to circle down the high that we need to take, this one, like we did here with this. This is our break, taking the high. I mean, now, anytime the price retests those lows, we can initiate another buy. And most likely is that we're going to see the price retesting those lows. It's a very strong support area, and I want you to guys pay attention to the MACD on the bottom. If the MACD continues on making higher lows, by higher lows I mean if the next bullish cross is above this line that I have drawn here, and the price is at the right shoulder, this is the left shoulder, this could be a good area for us to buy. Now, going in a down channel, a lot of times we can see a patterns developing in the channel, like here. Anytime you have a pattern converging with the top line, like here we were in the down channel, every time you have a pattern converging or hitting the top line, it's a good place to sell. No, I don't want to spend too much time on channels unless any of you guys have any questions on channels. I would like to continue with the pennants and the flags because we can spend some time there. Now, a lot of traders don't make difference between a pennant and a flag, and I would like to clarify something. When we see the price moving in an uptrend, so we used to be in an uptrend, and then at some point you guys can notice that the price is not longer making higher highs and higher lows, but it's trading in something formed as a triangle. This is a pennant formation. Most of the time we will see this pennant, if we used to be in an uptrend, breaking to the north and continuing the uptrend. Now if we hit here at some point a strong resistance level from a higher time frame, even from this time frame, a strong level of resistance, we can see the pennant breaking to the south. Now this is a pennant. What's the difference between a pennant and a flag? The flag, we used to be in an uptrend, and then the flag will form some kind of consolidation. It's not a triangle, it's consolidation. Most of the time in this consolidation we'll have an AB equals CD pattern in it. Let me draw that away actually. We'll see an AB equals CD within this flag, and this is what will form the pattern. Now, it doesn't need to be horizontal. It can be formed like this. It's still a flag. Here is where we have an AB equals CD. And a flag, the best way to trade it is to find an AB equals CD inside. And once we find the AB equals CD, then we will draw those extra lines. We'll place them in so we can actually form the pattern. And what we're going to do is we will be trading the break of the flag. Now, whenever the price breaks off this line that is connecting the A and the C, this will trigger the breakout. And as I always say, I always like to trade the retest. Now there is a few different techniques that you guys can use for trading flag and a pennant. And I'll tell you all of them. The one is, as I said, we're waiting for a break. I would like, when I'm trading a retest, I would like the market, the price, to come and take this previous high. So I want to take the C. If it's a pennant, I would like to take this high and then come back and enter the retest or the middle of this pennant. This is the way I like to trade those two patterns. Now, there is another technique that you can use to trigger your trade. There is a question if those patterns are generally traded in the direction of the previous trend. Now, yes, the way we trade it is in the same direction. As I said, if you see this pattern, pennant, I'm sorry guys, or the flag, formed at major support or resistance level, we can trade it in the opposite direction. Now also note that a lot of times we will see pennants form prior to news announcement, because more and more people will be taking profits, and then as we get closer to the announcement, we will see less market participants, less traders trading currencies, and this is what is actually tightening the range. And this is how the pennant is being formed. Now, the other technique we can use is, I will draw here on the side so it's larger. Let me try to zoom in, see how far I can. It won't let me move a lot here because we're out of the candles. But this line that I just drawn, the big one, is representing this line here. Here is where we have the A, B, C, D. This is the break. Now, I will draw a candle. Now, we need to look for a bullish candle to close above this trend line. This is confirming the breakout. Now, as soon as this candle closes, we'll start forming the next candle, right? So the next candle will start moving up, will start moving down, will start forming a body. We're still not in the trade. Now, the high of the candle that's closed bullish above the trend line, this candle here that I draw first, the high of this candle is our buy level. Now, we can have a candle, next candle might not touch this high. It might do. We don't know. And we can start forming a second candle. Now, here, once we touch this level is when we enter. We don't need to have a candle closing above this level. This level will be the trigger. Once it's formed, we can enter. So what we need is a candle closing above the trend line, and then the high of that candle will be the buy entry. Now, there is a question, how often would I guess the market will break in the same direction? Well, if the market is moving north, I will be waiting for me. I will be waiting for a bullish breakout. If I see a bearish breakout, I would not enter. If I see a bullish breakout and the price gives me a retest, I will enter the trade. If I'm at major resistance and we see a pennant forming at the major resistance, that means that we were already in a bull trend. If I see a bullish breakout, I would enter. I would also enter if I see a bearish breakout. But if we are not at any strong resistance or support level, I would only try to enter the trade setup as continuation pattern. So in the same direction. Now here, we had a breakout to the south. I wasn't looking for an entry. And as I said, I'm always looking for the price to break the previous highs. Once we break the pennant, you can see that in this setup, the price broke not to the north, not to the south, but broke horizontally. And as I told you guys, I want always the price to go higher than this previous high. This previous high, if it's taken, and then when I see a retest of this level of the pennant, I will be entering. I will place an entry buy at the level. Most of the time, it will be the middle of the pennant. Let me see. Somebody was asking, I'm reading through the questions. Yeah, somebody was asking about the USD JPY 15 minutes. I hope this is the what it was referred to. Yes, okay. I'm glad I was able to answer that. Okay, thanks, Victor. Victor is the question guru. Now, if the price would have taken this high and give us a retest, now, not you guys need to understand that by having the price move as much of the pennant of the breakout, this confirms the direction very clear. And if we would have taken this high and then come back to retest, this is very, very strong confirmation for us that the market is moving to the north. If we only use a technique where we want a closed candle above, like here, we would see the closed candle above, we can enter the market right away. Now this will give us entries a lot more often, because we can see the market taking off right away as it breaks. But also a lot of times when it breaks, it will retest. We all know that. If we use the technique with the candles just closing above the trend line, we will get a lot more entries, but also we will get stopped a lot more often. Both techniques are good. It's up to the personality of the trader and what makes you feel more comfortable. Now, another thing, let's talk about pennants and news announcements. Let's say we have the market has been going bullish. We have a news announcement. The price is narrowing. It's forming the pennant. Now, we know that, let's say, hypothetically, not talking about USD JPY, just any pair. If the numbers are better, the breakout will be to the north. If the numbers are worse than expected, the breakout is most likely to be to the south. Correct? Now, once the price, once we have the numbers out, the market is most likely to move immediately in that direction. So if you see the numbers, you can do two things. You can either enter as soon as you can, place your stop below or above the middle part of the pennant, I always draw a line that's kind of in the middle of the pennant. First, most of the time it's support coming from previous days, and also this line will act as resistance or support area once the market moves away of the pennant. Even in a few days, this line can act as support, the middle of this pennant. You should try this. So the middle of the pennant is a good support or resistance area. And once we have the numbers, if those numbers are good, we enter bullish, place the stop below the middle line. If the numbers are bad, the price moves bearish, we enter short, we place stop above the middle line. Another thing is always, even on strong announcements, announcements that would move the price fast, we can still see some retest. Of course, if the price moves immediately like 60, 70 pips, there's no point of entering because we've already missed the initial move. And what I do, because I don't like placing buy and sell orders, but I would do some analysis. We've been in an uptrend. If I would place a stop entry, stop buy or stop sell, would be based on my technical analysis, and or if I have some expectation of the number. Let's say I expect the number to be bad. I don't think that this number could be that good because of whatever announcements we had over the last week. And I think that this one that's coming up will be bad. So what I would do is, once we're close to the announcement, we have this pennant, I would place a stop sell like 15 pips below the price, and I will place a stop order like 10 to 15 pips above the middle line, and this will give me usually a stop somewhere around maybe 25 to 35 pips. So I will have a stop sell order, and then I'll have my stop above the middle line, and the stop sell will take me in short. Now if the numbers come out good, the market will move to the north and it won't even touch my entry. If the number is bad as I expected, the market will move through my entry, it will take me in, and if the expectation, if the actual was very surprising, it might hit my limit within a couple of seconds. Sometimes I can enter and exit pretty much at the same time. Like I will just hear the noise of the entry and limit, you won't even see that you were in a trade. Now, the last couple of weeks, all those announcements have shown us that sometimes price does not move, even on big, on very surprising numbers. The market was very, very slow, but in normal trading conditions, we can see huge moves out of some of the announcements. Now, if you're using, somebody saying as long as you're not slipped 30 pips, if you're using good broker, you won't get slipped. There's a few things that can slip you. So how does the triggering work? You can see that price refreshes in your platform once every second, or some brokers a couple of times a second. Different brokers refresh their quotes on a different basis. So they have their data feed is doesn't work with the same speed. This is the first thing. And if your entry was, let's say, hypothetically 90.69, the price was 90.70, the next time the quote refreshes, the price is 90.50. So it's already slipped 19 pips of your entry. And some brokers will execute your price no matter how far from your entry, from your preset entry the price is. Some brokers will have very quick data feed, and they won't slip. They will refresh at 90.70, 90.69, 90.68, 90.67, because their servers work very fast, and they will execute your order at the price. Or if the price moves faster than their data does, you can adjust your slippage. And with my broker, I can say, okay, I can accept, and you can preset this ahead of time, where you can say, okay, I can accept slippage within 3 or 5 or 10 pips. So if the next time the data, the quote refreshes is at 90.60, I'm still fine to enter, and the software won't even ask you, because other softwares, when they ask you, okay, the price is now at 90.60, is not at 90.69, do you want to enter? By the time you click yes, the price is moved at 90.50, and it won't accept your yes. It will ask you again, and you won't be even able to enter. Now, you can set this automatically, where you can accept slippage as much as, let's say, 10 pips, and if they refresh within those 10 pips, it will take you in. If not, it won't take you in at all, and then this trade will be invalidated. But it is very, very good if you're trading news. And I know a lot of brokers, their platform do not handle news very well, or big moves. If you don't feel comfortable with your broker, you should probably not trade news. Yeah, I've heard George is saying that he's been slipped with FXCM a few times. I've heard from a lot of people that they get slipped a lot on with FXCM. Let me see if I can start my platform, or okay, let's continue. Um, um, let me read the questions, guys. Somebody's also saying that sometimes FXCM will get you in without actually reaching your entry point. Yes, sometimes the spread can get really wide, big, and this is where you can get, you can be taken in. And yeah, this is sad. Let me see. I would like to remember because in my platform I'm not accepting any slippage. I will need to play with it and see where it was, and I'll show you guys if any of you is interested. How to preset the slippage. Okay, we're on. Okay, let me continue. So we've talked about pennants and flags, some basic stuff. Now, I would like to say a few words about a wedge. And what the wedge is, let's say we're in an uptrend, and we are making higher highs, higher lows. I would like to make it more like this because my screen won't be enough. Okay, we're making higher highs. Then at some point, we'll see, we will continue on making higher highs, but actually we won't, higher lows, I'm sorry, but we actually won't be making higher highs. And those highs won't have too much of a difference. They will be very close. And here is, now, sometimes you can even get confused. Okay, are we in an uptrend after some time? Are we in an uptrend? Because when I draw my trend line like this, it seems like we're in a downtrend. When I draw it like this, it seems like we're in an uptrend. A lot of traders get confused. Well, this is so-called wedge. It's close to the pennant, but price is not narrowing as much. It's more like consolidation that's getting smaller and smaller. And it can be horizontal, it can be going up, down, in all different directions. Something specific for wedges is that I love trading bats. When I see a wedge, I'm always looking for a bat. And I will delete those lines. We'll leave only those two horizontal lines. Not horizontal, but now we'll see the price move up. It will bounce. We'll move down. We'll do something. Can go even higher. It can even give us a guard lane. It won't touch the top side. It will move down directly. It can do something like this. It can give us a double top bat. All those are different patterns. If we can be able to see them all, we can trade them very well. First, we had this bat. Here of what I draw. We had an bullish entry. And here, we had a bearish entry on this Gartley. We had a bearish entry on this bat. And what I'm doing is, usually I'm trading those setups with a very small stop. I'm placing the stop, not even the rules say that we need to place the stop below the X, because this is here the X, and the yen is moving. Let me just see. It wasn't even today. So if we hit the X, A, B, C, and this is This is why I like those wedges so much. It's because you can literally put your stop almost at your entry. I will place my stop just below this line, the horizontal line. I'm calling it horizontal, but the trend line that is almost like horizontal here. So here I will place my stop. On the guideline, I'll place it again above the trend line. Above the trend line, always. Now, if I would have to place the stop the way I was supposed to, I need to place it above the X. So my stop should have been somewhere here. But now I saved all those pips from this to this. This gives me a lot higher risk reward. The stop is almost twice as smaller, because you can see that from the entry to this stop and to the one that we actually were supposed to place the stop at, we're almost saving half of the distance. So those wedges traded with the patterns that we already know how to trade can give us a very tight stops, good resistance, good risk reward. I'm sorry. What we need to do here, once we notice that, okay, we're trading in a wedge, the first limit is okay, but we might think of where are we going to place the second limit. If the pattern takes too long to hit the limit, and it's already the trend line is moving above the limit, we should adjust the limit so the limit is always within this zone here between those two trend lines. This is for the second one. If you want, you can leave your third limit where it's supposed to be. And let's say we were entering the bearish Gartley. Entered at 786, and we want let's say the T3 to be at the 127. We can leave it there and have the stop at break even once we have filled target 1 and target 2, because sometimes even though the market will be trading between the top side and the bottom side, since they're tightening, by the time it gets back, it might never touch your stop at break even. And in future, let's say somewhere here, if the price breaks lower, you still have this nice trade here. And you have this open lot that you need to fill. George is asking if there's another class after. No, there is no another class after this one. So I want you guys to start looking for those wedges, and anytime you see them, look for a pattern. If you can find a pattern inside the wedge, please trade it. Place your stop as close as you can below that trend line or above it if it's a bearish, and let it ride. If you're entering a bat, place your 3 limits for sure. Leave your third one to run and your stop at break even. Now the bat will give you a lot higher chance of success of the third target when you're trading the wedge, because you have entered as close as you can to this trend line, and then your stop, even though at break even, will be as far as possible. And you can have this third lot on for days, maybe even a week, but just leave it. Try it. Demo trade it first. Try to see how you feel about it, and how you're taking it emotionally, because you will see it going up and down all the time. And a lot of traders can't take that position trading. They can't leave position running for too long. They don't like watching the price going up and down. If you're one of those traders, for now the best thing you can do is just keep your targets as tight as you can. Of course, follow risk-reward, good ratios for the risk-reward, and take profits quick. But if you don't have problems with leaving positions for a longer time, for a longer period, and you can watch the pips go 60, 80, 40, 60, 100, 40, going up and down all the time, those position trades will pay off. The question is if we can find wedges in 1 hour or greater. You can find them at all different time frames. You can find those in all different time frames. If it's on a higher time frame, then we'll be trading a lot bigger patterns. If it's a 4-hour or a daily wedge, this pattern that we find inside will be huge. And even if we want to place the stop below the trend line, it will be really far. So what we need to do is confirm that pattern with pattern on a smaller time frame. Let's say if we want to buy this D and this was let's say a daily time frame, probably the stop would have been like 200-300 pips at least. And what we can do is go to 1 hour or 15 minutes once the price comes close to the D, and start looking for some bullish butterflies or a bullish head and shoulder patterns. If we see a bullish head and shoulder pattern on this wedge at the price that we're projecting for the day, we will trade that bullish head and shoulders, and we can have limits based on the wedge or based on the bullish back that's on the daily. But note that this can take a while to limit your targets, because the price, once your this hit, the price will go up. It will go probably to the middle of the range. It will come down. It will go up. It might come down a few times, then go up. So you need to be really patient. If you're entering pattern like that on higher time frame, you need a lot of patience. Let's see if you guys have any questions. I will go over the questions to see if I'm missing something. Now here, this is your JPY 4-hour chart, trading in a small up channel. Also know that this can be a left dip, left shoulder. Somewhere here we can form right shoulder. It's at the 786 of the current up AB. Here we have good resistance formed from the highs, those little highs here at 618. So what we can see is the price might break this small channel, bounce of the 618, move back up, find resistance at the lows, then come to the 786. If we see the price move in this manner, we'll be looking to buy 120, 80, 90 area. We have broken the trend line. Let's see where those highs are. But we almost took the high. 125.19. It should be very close. 125.22. So we will be watching this area. Let me go over some pairs. Um, I already told you guys about the euro. Based on the daily, we can see the euro go even higher. Right now we're at the downtrend line. We can see another retest of the support, or we can break through the north. We need to watch. Pound dollar daily, we found resistance, support, I'm sorry, at the 618. This is a very big swing. A at 135.11, B at 170.43, support at 618. This is a short-term trend line. We almost touched the trend line. On the 4-hour chart, nice support becoming resistance area, converging with 618 of a bearish swing and 127 of a bullish. Also AB equals CD pattern, converging at the same level. We came close to it. We can still see the price go to that level. Swiss franc, 4-hour chart, current bullish AB swing at 786, converging with the bearish one, 786 with 127, giving us a bullish Gartland. Those who have missed can wait for the market on the 15-minute chart to come down. We might form a bullish head and shoulders, left shoulder, right shoulder. Also, we might form a bullish Gartland if we find support at the pivot point. It's very close to the 618. So we can do something like this. We're going down, finding support at the pivot point, retesting this resistance, becoming support, becoming resistance area, and going down to finish the Gartland, bullish Gartland, 786. The buy level is around 105.80 with stop at 105.50. Targets 106.29, 106.57. There, Victor is asking where we'll place stop on 4-hour Euro JPY. Let me take a look at it. For this trade, if we see this Gartland forming, I will go to 1-hour chart and I will be looking for entry based on the 1 hour, and I will place my stop based on the 1-hour chart. Let's see how far would the stop be if I just place a stop based on the 4-hour. The stop will be at around 140 pips. not a very good stop where we can actually find a lot better. If we converge two patterns from two different time frames at the same level, this gives us a very good probability of the trade being successful. Note that this is 4-hour chart and the entry will be in a range. We cannot expect the market to bounce at exactly 120.83. This can range within 40-50 pips. It's a 4-hour chart, and this is why we would like to fine-tune the entry on a smaller time frame. It's not an easy job, but it's our job to learn how to do it. To some of you guys, it can sound a little confusing, but it's only so in the beginning. I'm sure that everyone will do a very good job very soon. This is USD Canadian. We used to be trading in bearish channel. We still are in the channel. This line presents very strong support level. A couple of days ago we broke that support level, and we can see the market test that the bottom side. But we can also see the market come to the top side and then bounce off it or even break. We can't be certain right now at those levels, and we need to watch the market, also the oil prices. The Euro Canadian is forming a bullish head and shoulders on 1-hour chart. This is the left shoulder, the right shoulder. We took the high, broke the trend line, we took the high. This is the high, and we are exactly at the right shoulder, forming a few bearish candlestick formations, bullish indecision candles. Now, we can enter Euro Canadian anytime with stop below this candle. We can also wait for cross of this Euro Canadian MACD. Once it crosses bullish, this will confirm the bullish entry. Even now, based on those few indecision candles showing us that the price might be moving back to bullish, we can enter and place the stop below the candlestick. You can see I'm getting this chart ready to be posted. Now, for those who aren't subscribers, this is 8-hour, actually weekly based trade. It's weekly bullish bat with 5-0 and 86 with 1618 convergence here, and we're trying to fine-tune the entry on a 1 hour chart. We can see that we are exactly at the 86 to the pip over there. We had a few attempts to enter, and probably this one here would be the best entry that we've had so far. Attempt. Now, let's see where the low is. The low of the candle is at 139.21, so we can place stop 939.11, prices at 140, 30 pip stop. My entry on this pair was based on 15 minutes. Let me, because a few people have asked me how I entered and where, but we had a bullish bat formation last week, and what we asked for was to have a bullish candlestick formation for confirmation. So this, the red line here, represents the entry level. We also have daily pivot point support 2 at that level. I will remove the pivot lines for now, so the chart look clean. But we formed the candlestick formation below the entry, and what we needed to do is this entry level, that pivot line, was acting as resistance, and we needed to have candle closing above this resistance in order for us to enter the trade. We see a few candles tried to break above. It broke but closed below. Now the first candle that closed above this resistance was that bullish candle here, and this is where my personal entry was. Then price moved up, hit a couple of my limits. Now we're retesting pretty much the same level. Let me go back to 1 hour chart. Question is, what time frame do you usually trade for the pattern to work the best? I prefer 1 hour patterns, although all different time frames can work as good. I personally prefer trading 1 hour patterns. And any of you guys, if you're entering this Euro Canadian, you can place the initial limits that we have for now, and we will adjust it later if any of you enter this trade. Let's go to the Aussie. because not Aussie JPY. No. Aussie USD 4-hour chart, bearish Gartley. We also had a 3-drive pattern converging with the Gartley. The initial stop was 92.04. The high went to 91.93. The entry was 91.60. It's been a long time. Some people closed positions for the weekend. Somebody closed positions before news announcements. I know some of you guys are still in the trade. Currently, target 1 is filled. The stops are moved to break even for the rest of it. This is what we had yesterday. I was able to see this bearish Gartley too late, but then we broke the trend line, did a retest on the trend line, broke to the south, and currently we are trading below the downtrend line that we have formed. The question is, what is CF? CF stands just for candlestick formation. Any candlestick formation. Stop on the Euro Canadian. Where did we say the stop was supposed to be? Below the low of the candle. So the low is 139.21. Proper stop. The tighter we can get it is 39.11. So 139.11 should be a good stop. And it's all looking good technically. We can see even stochastic is turning bullish. The MACD is getting ready to close. And the most importantly, it's going to close bullish above this line that I've drawn here. It's very important to have the MACD making higher lows. This is indication for a further bullish move. What is my opinion on the Australian USD? Now this is very, very strong resistance level. I can tell you this much, that if this MACD, this is a daily chart, if the MACD crosses bearish, and it crosses below this line, we're going to see a drop, and it's going to be a very strong drop. If something fundamental happens and we continue on trading in consolidation, we will also see this MACD not being able to cross. Those two lines will continue moving like that, and they might turn bullish. If they turn bullish, so will the Aussie. But if those MACD lines cross bearish, we will see a strong bearish move. So far, we've had a very strong MACD divergence, and it's continuing. You can see that every time the MACD is crossing, is making lower highs, and those moves are even bigger and bigger going down. So we can see the Aussie go lower. George, did I miss a question? If you can type it again, because is the MACD the same as MT4? MT4 trend scalper. I'm not sure if the trend scalper has the a MACD. I don't remember. But if you're referring just for the software, the MACD should be the same. Although I think the way the settings need to be set was, I think the settings are switched backwards, so you might need to have the settings set to not to 26, 12, 19, but to 19, 12, 26, if I remember right. Because I do remember that there was something different on the MACD settings of the MT 4.0, and I believe was this, that the settings were backwards. I've had there's a question of where should we limit on the Euro Canadian. I have different limits going all the way to 162 area, which is almost 2,000 pips range. The first couple were 40.50, 41.11, I believe. Let me, I don't have on any of those charts. They're one of all the older posts. But now a good limit would be this high for first limit. So now your first limit could be this is awkward. So yeah, this is the 786 level. So below that high, because it's forming a strong resistance area, you guys can see it here, here, even those lows, both candles, those two indecision candles, both lows touched that level. This is 786 of the current bear swing. So your first limit should not go anywhere higher than this level. A lot safer will be if we have the limit here at the 5-0 at 90, 140.11 somewhere, or we can use 140.60 for first limit. Then the next can go even higher, 141.50. We can use some fib numbers, 142.20, and then based on the weekly for long term. Now, whenever you're trading position trades, guys, make sure that you can afford the size. Don't, if you're usually trading, let's say one standard lot, or let's say 5 minis, and if this is the limit that you can trade, just spread those 5 limits over all those targets. Don't go like 5 minis on each target, because if you get stopped out, it will hurt a lot. Just spread what you can risk normally on a trade, and since this is a position trade, you can a little higher your risk a little bit. For me personally, what I do is I use risk between 1 and 3%, and on all the trades that I have between 1 and 3 limits, I use 1% of risk of my margin account. Those are daily intraday trades, quick trades. I call them quick trades. If I have a position trade that will require anywhere to like 5, 6, or 10 limits, then I will go to like 2 or 3% of my margin, and still I will execute. I will have half of this margin within those first 1, 2, 3 targets, and then the other half for the rest. So this way I'm making sure that most of it has been taken out as soon as possible, and I can capture good profits quick. If you guys don't have any further questions, we will be ending with this video. I'm glad all you guys came here for the Monday class. I hope you guys learned some new techniques, new ways to trade the market, or if you knew something, I was able to help you to learn even more. Murphy is trying to say something. Mary. Okay, I'll unmute you and Mary, if you'd like to say something, or you can just type it. Thank you, everyone, and I will see you later in the chat room. And thank you for visiting the website and the class tonight. Have a good night and safe trading.